I promised you it was worth the wait. And what a year we've seen that we've had. And reflecting on that year, we're going to now look at a year in focus with a bit of a review. So I would like to bring back onto the stage again Sharif El Badawi, CEO of Dubai Future District Fund, who can tell us a little bit more.
Thank you, Jane, and thank you, Your Excellencies. As you could tell from their talks, we were pretty insistent on focusing on certain thematic themes throughout the fund. In our first year, as we were setting up the foundation for the Dubai Future District Fund, that foundation was based on governance. We were intent on providing an institutional foundation for this. Even though it's a venture capital fund, we took our job a lot more seriously than just investments. And we want to be stewards to the ecosystem from all the constituents that are part of our community, from the startup founders up to the investors, and also any ecosystem enablers who are part of that. So the second year, we decided to cover the second base, which is sustainability. It also happened to coincide with COP28 being held here in Dubai. And a lot of the themes that the speakers before me had alluded to. There's a focus on talent. There's a focus on proper and prudent business practices, because these things are better for business and also better for our communities. I wanted to start by giving you guys some highlights. The clicker doesn't seem to be working. So we are specialists in technology, clearly. And if something could go wrong, it definitely will. Somebody want to change the slides maybe for me? I don't see anyone running to the stage or anything like that, but we can just have a cozy chat. But what I'm about to go into, it's divided into a few different sections. So the first one is, we always get asked how MENA, how the UAE is doing versus the rest of the world in light of the series of sort of black swans that the ecosystem has had globally, starting with COVID and ending in the economic downturn. And to be honest, we see some kind of counter trends. Maybe a lot of you have seen it as well. But what the reports show, this is not anywhere near the right slide. So now maybe the clicker works. You're getting a sneak peek into what we're going into. Okay, now that these are working, let me start over. So you heard Arif and Khalfan talk about the importance of people. And in venture capital, the first answer you get when you say, what are you looking for investments? People say team. And we're certainly no different. It was the focus from the beginning. It's putting the team together. And we're honored to have the leadership of our board and our higher oversight committee. Their guidance and their belief, even before any of us stepped onto the stage, was years in the making, as His Excellency Abdullah had mentioned. This stuff takes a lot of work, a lot of intent, and we've got it launched in 2021. We also have our team, which has grown significantly. If you were here last year, it was not even half this size. And we started to take on other functions that I mentioned in the opening, aside from investments, to do a lot more work for the ecosystem, as we see ourselves as custodians and thought leaders in that regard. In addition, as part of the governance that I mentioned, we have a pretty full investment committee now, very active. We've approved already, just 20, 25 investments in just a short period of time. Those are fund investments and direct investments, and I'll show you them in a second. And also forming other types of committees to ensure an enduring firm that practices sustainability. And in this year's theme of sustainability, we really saw it in three different lenses. The first being sustainability in business practice. We've seen stories, you've read the headlines, that when these things aren't watched out for carefully, a lot of bad things can happen, and that reverberates across the ecosystem. We've even had them in our own little startup bubble or startup ecosystem in the Middle East, where a few incidents have happened just because people didn't follow proper governance. There wasn't proper oversight. And it's not just that one company might fall. it has a pretty negative effect on investor sentiment all around that particular ecosystem. And that will affect international interest in the region as well. So we have to be extra careful, and we certainly take that as a responsibility as a Dubai Future District Fund for ourselves, but also for all of our constituents in the ecosystem. So forming these communities is, A, to be an example, but also to make sure that we are sustainable ourselves. The second lens of sustainability is about the startups themselves. You saw an over-exuberance in the last 3 to 5 years, where startup valuations were going through the roof. Nobody seemed to be looking at the underlying economics of these businesses. And again, those fall flat on their face, as you've seen in the last two years or so. And that means a lot of money is lost, and a lot of companies die, a lot of jobs are lost. So it's very important for us to influence startups, to help work with them, and investors, to be honest, because I don't think this was a founder problem over the last few years. It was equally an investor problem. This over-exuberance caused a willful ignorance or ignoring of the underlying unit economics and cash flow positions of these startups in favor of grow at all costs types of mantras. And thankfully, we're in a reset now, and we didn't go too far out of whack here in MENA. And the reset, as I'll show in a second, really wasn't as far as an impact. In the last year, we've done a number of new fund investments, I'll show you in a second, and new startup investments, and we're really starting to get on a roll. For those of you who are new to DFDF, just to give you just a high-level review of what we do as a fund, our investment mandate is to invest from the UAE to the wider region and to support the wider region. As you saw, Minister Abdullah talked about a responsibility the UAE has not just to take care of itself through its own resources. We all take on this responsibility to take care of our wider neighborhood. Not solely take care of it, of course, but it's not about just make sure we're okay. And when we talk about making sure we're okay, in what regard? So again, back to sustainability. If you read any of the 2050 economic reports, there are several out there, very good ones. And the number one driver of the causes they mention in those reports is population growth. So from that regard, the UAE should be fine if the population doubles in the next 30 years to 20 million people. Not a big deal. But for many of our neighboring countries, that could be a significant impact on them. For example, Nigeria could move to 400 million people, Indonesia to 800 million people, Egypt to 250 million people. These will have significant ramifications on food supply, job supply, and energy. So again, sustainability starts to weave into every aspect of everything that we do. The third part of sustainability is about the planet, of course, which is probably the first idea that comes in your head. So we're looking at it as sustainability in business practices, sustainability in the startups, which are the stars of the whole subject we're talking about, and sustainability, of course, for the planet. And these are starting to become more meaningful, and I'll talk about a few of the trends that we're seeing now. Our fund is split into two. So we invest 50% of our capital into venture capital funds to enable the private sector, to enable the capital deployers to add more diversity and optionality to founders so that they have choice when they're raising money. And then we have very strategic reasons to also invest directly into the startups ourselves. And we do that in two different strategies. One we call Build, which is the very early pre-seed, seed stages. And that's to support the programs and all the other efforts of our sister organizations here in Dubai, and to catalyze the momentum behind these very young ideas that we think are strategically aligned. The second strategy is for Series A to Series C stage companies, which are the larger scale-ups. And that we would mostly do co-investments with the private sector funds, a lot of the funds in our own portfolio, or international startups that are now coming to the region to scale up. So everything is thought through as a very complementary strategy, mindful of our position as a government-backed fund. We had a choice in the beginning to be profit-focused only, which is not a bad thing. It actually provides prosperity, and with prosperity you have resources and you have means to do more things, so that's a must. And whether we should also be strategic or impactful and things like that. And what the studies show is that if you have both, So you have an eye on profitability or performance, which comes in the form of value. So the means to get to that end matters, right? Because two people can end up with success through different paths. For us, we're very intent that the path we take to get there has to be something that either provides for humanity, the planet, or business enterprises in a good and healthy and enduring way. So we always think of it this way. Any of you who have been in this type of a business before, we have to maybe compromise or think about the compromise between profits and impact. It's always been a hard problem to solve. But because we've been working and thinking and diligently sort of modeling this type of work for the last 3 years, we have a very interesting way and sweet spot way to do that. So it hasn't been very problematic for us. Now I'll start to move into the startups themselves. I've told you the people are the most important, and so we need to focus on them. For many years now, the data has been out there and known that 90% of net new jobs come from startups and small businesses, with a majority of them coming from innovative small businesses, which we would potentially classify as startups. And even in recent studies, as you can see here, so the younger companies are the ones producing most of the jobs. So this is a very positive thing. The UAE and Dubai have always been very entrepreneurial, and the number of small businesses contributing to the GDP here are numerous. And this is the same in a mature market like the US. So it's no different in emerging markets. New companies create most of the jobs. Now, there are some downsides to that, of course, if there's high turnover or the companies aren't surviving and people have to move. So there's a lot of movement in those jobs, but young people tend to get most of their entry into the career path through new and innovative companies. So it's important for us to continue to support the creation and the scale up of these types of companies. I mentioned the macros here in the MENA are slightly different in light of the economic downturn that we've seen and heard about the last 2 years, particularly hit the US, where the origin of a lot of the innovation economy, but reverberated everywhere in the world. And at least at my age, and I think many of you, whatever hits the US economy will eventually hit every other country, right, in some way or another, because it's all interlinked. However, something interesting happened in the last 2 years. The macros in MENA, particularly in Saudi and the UAE, couldn't be more different than the macros that were happening or building up over the years in mature markets, namely GDP growth. It was roughly argued that last year, 2022, 2023, in the US had a negative 1% GDP growth if you factor in the debt. However, UAE and Saudi grew at 4 to 6% and expected to grow 4 to 6% over the next couple of years as well. This is like unheard of anywhere else in the world. The motivation of the governments in these countries here is super high, right? They've been planning for a while, they're executing, they're listening, refining, and planning and executing, like nowhere else in the world. I mean, you probably all drank the Kool-Aid like I have. It's hard not to be excited about how motivated the governments here are and how that lays the bedrock for innovation and talent to move here and be attracted here. So in these charts here, what we show is that in the middle of 2022, this is when the economic downturn hit the startup ecosystem or the venture ecosystem in the US and around the world. It's a pretty stark drop and continued to drop until now. However, if you look at MENA on the left side, we didn't have the same pattern at all. In fact, when the US dropped, or the rest of the world dropped, we continued on a high. And that's because we saw a 2 to 3 quarter delay in the effect that was happening in the US, mostly driven by increased interest rates, inflation pressures, and the economic pundits saying the world is doomed, the world is doomed, right? So naturally, you're going to have investor reticence here in MENA, not that we actually had anything on fire, but just because we're hearing it there and we're used to those things affecting us. Of course, it has affected the economies in many ways, but from a startup ecosystem perspective, many of the governments and the fund of funds, or what we call limited partners that invest in the VCs, were flush with capital, fresh capital, like the Dubai Future District Fund and many other funds of our peers around the region. which meant that they were interested and inclined to deploy capital into the venture capital firms themselves. So the venture capital firms, many of you are sitting here today, were also flush with capital. Third, the startups themselves were not as hooked to the venture capital IV that other startups in the US and other markets were. So when the economy seems to slow down or to halt, it's easy to correct course, cut costs, turn into sort of a survival mode than in other areas. So we didn't feel the dip as fast. I'd say 2 to 3 quarters before we started to see some cracks here. Were those cracks as justified or justified on the same basis as the ones in the US or other places? Not necessarily. They had their own reasons for slowing down, and investor reticence, of course, held back. But then it started to pick up again. So we were always being asked, when is the bottom going to hit? Nobody knows when the bottom's going to hit. Still a question in the US. However, here, as you can see from the last 3 quarters ending of 2023, we not only look like we hit the bottom, but are starting to climb back with a vengeance. And from everyone I've spoken to and what we see in Q1 of this year, the activity has been higher than ever. So we expect that to continue, hopefully, in the recovery for MENA to continue into 2024, to actually beat our pre-COVID numbers. And that's already happened in certain pockets if you're looking at a particular country or particular sector or stage. So for the UAE itself, though, what's happened? We didn't decline that much compared to MENA, but we also didn't increase much. So in the last few years, we've sort of plateaued. And it's a sense of urgency as to why this is so important. We've said as you heard the speakers and myself say so far, bringing talent and being innovative is so critical to the growth of any economy that we need to make sure we're putting the right resources and attention to it. But what we see here, and it's not sound the alarms yet, but when you see a plateau of over 3 years or so, then it's maybe something we should think about how we're going to make sure that we don't start to decline over time. So that 3 years of investments is mostly predicated on years before that of deployment and fundraising and efforts and startups being created. And so this is just the after effect of it, which means if we're not going to continue to deploy at the levels we were, we will eventually see a decline. And so that's something that all of us should be thinking about on how we're going to ensure we're all enjoying the fruits of this so far. Let's make sure that we make sure it endures. Well, I was going to mention the exits on the right side. So the exits have been pretty healthy. And despite what the West has always questioned us about when I used to live there, is where are the exits? Where's the liquidity? Well, guess what? Since the 80s until now, yes, it started in the 80s, we had IBM and Microsoft and these types of companies acquiring companies from the Middle East since then. Nobody talked about it back then. There was no tracking. But at least since then, and particularly in the last 5 to 7 years, we saw an increase in frequency and size of exits, technology exits. So that's starting to show that exits are possible here. Yes, there's work we need to do, both from an M&A and IPO market point of view, but it's certainly possible and it's happening already. This year, I think you'll see a flurry of more exits coming just from what we hear. So things are good, but I also want to highlight what I've mentioned before is that we have to keep working hard on this. Okay, the Dubai Future District Fund and our shareholders, of course, are super committed. It's not enough. We need all of you to be involved in this, both government and private sector. And we can get into reasons why that combination is very important for a healthy ecosystem. But in terms of one way we look at venture capital deployment in quantum is we compare it to the GDP of a particular country. So I remember 5 or 7 years ago when we looked at the US, it was something like 3% of investment dollars went to venture capital in particular, or 3% of GDP went to alternative investments. But if you look at where we are now, not so bad. I mean, 0.25% is the UAE. But where we need to be, so in order just to sustain that, we need to continue on a $1.3 to $1.4 billion a year just to maintain where we are. But if we're ambitious and we want to grow, and who isn't, we need to get up to 2.8 billion, excuse me. And of course, if we want to really leap forward, we need to increase that even further. So the question is, where is that capital going to come from? We need to talk to the allocators. We all need to be working together. And we hopefully will provide a platform for the community. We are meant to be serving the community. And there are many sister organizations around the Emirates who are also thinking about solving this problem together. But it is a problem that we should be watching out for. So let me dive into just some quick tech trends, because that's the next thing we always get asked on, either in panels or in interviews, is what do you think is going to happen next? Right? What are the tech trends you look at as an investor? What should startups be focusing on? And thankfully, I'm very happy that after all of these black swans and sort of downturn effects on the market, we hear founders coming to market with more meaningful businesses than ever before. That whole grow at all costs, I'm in it to be famous, I'm in it to make more money, or any frivolous type of business, I'm just going to call it a startup. Those days are waning, thankfully. And businesses are coming to us and saying, I want to solve this problem for humanity or for the planet or for other businesses because I felt that pain point. So we're returning to the origin of Silicon Valley essence, the culture of Silicon Valley, which honestly in my 30 years never heard the word grow at all costs. Nobody ever advised me to do that. I think that crept in, right? Crept in from the sides into the ecosystem, and now it's being washed out, thankfully. So the first trend we want to focus on, of course, is sustainability. Of course, it's our theme for 2023, 2024. COP28 was here, as I mentioned. And it's also important that startups follow these things so that they have survivalhood. And that businesses and governments are watching over to make sure that bad things don't happen. It's also mostly important for the planet because none of us will have enough food or energy to survive past 2050 if we don't take care of these solutions now. The second theme, of course, you're going to ask about is AI and robotics. It was always an intention of ours in the fund. It was written into our first document that we want to go and focus the region back on deep tech in general. AI to us is not going to take over one thing or another, but is the introduction of another level of horizontal technology that is useful in every type of business. Is it a trend? Is it going to go away? We don't think so. We think this is now going to catapult the efficiency and effectiveness of every technology and every business, whether they're B2C or B2B. You might have already started to feel the effects of this. The third one, and it's been a big focus of ours, almost half of our thematic thesis is about the future of finance. And it's a pretty loaded, pillar, but it includes all the 15 to 20 subsectors of fintech. It also includes regulation tech and legal tech, which we find very important for compliance and governance and data sharing and all of that kind of stuff. And we've done a lot in investing in this area and hopefully to support a healthy ecosystem along with our partners like the DIFC. The other trends that we are very excited about embarking on, and we've just barely started to scratch the surface. If you meet some of our startups here, they're in both of these fields. It's healthcare and agritech. These are massive, pretty untapped, but very essential solutions or areas of solutions that are important to the UAE and the wider neighborhood. If anything, the global south is going to be impacted by the effects of climate, the effects of changes in world geopolitics more than anyone else. And that's more than half the population. And we sit right in the middle of it. So these are two things that we think we have some leading edges on alongside, both to the right and left of us geographically, and an area that we're intent to focus on as well. You notice in our name, it talks about the future. In our thesis documents, it all talks about the future. In every pillar we have, we say the future of health, the future of finance. But that's intentional. It's intentional because we're not investing in just another type of business model that you've seen somewhere else and maybe it'll make some money. Again, because of the mission behind it, we want to invest in bleeding edge technologies and push the envelope for our region into deeper areas. And that applies certainly to healthcare and digital health. We want to go into more precision medicine, more genomic sequencing, more therapeutics and things like that, where startups are now starting to actually build those startups, believe it or not, right here. And in agritech, we have a different sort of agritech lens because of the environment that we're in versus, let's say, very fertile grounds in some of our neighbors' countries. So we have to think of technology at the forefront of food sustainability, not as an afterthought. Oops, sorry. The other thing is that, as we alluded to with the data that I showed earlier, the trends that we're going to see and continue to see here in the emerging markets is quite different. So I don't think we can take it for granted and just be a follower. We're starting to chart our own courses. And it's starting to show in the types of startups and the type of talent that is being attracted here and the motivation that I mentioned from the government. And these dynamics, I think, are going to help leapfrog technologies in the region that are more impactful on their subjects. And the last one is diversification and global investments. We're seeing an enormous amount of influx from the US, from Europe, from Asia, coming here, both investors, startups, and everything in between, like never before. I mean, it's always kind of been happening, but the last year or two has been enormous. And in those dialogues, the rhetoric has changed. It's no longer like they're coming here to take back to their home countries. It's also about a dialogue about, we're happy to support you. What are you doing for here? And I'm super happy about that because it was never part of the conversation before. And more, we're seeing genuine, authentic interest in funds expanding their skill set and cross-pollinating their portfolios to the region. This is going to bring more verticalized funds, more deep tech that may not be able to get off the ground yet, although we're very happy to be working with Dubai Future Foundation and Department of Economy and Tourism on an R&D and grant strategy, part of the D33 economic plan. That will take some time to develop, but in the short term, we continue to win as the UAE because every geopolitical thing that seems to happen, we get an influx of deep talent and with their IP coming here. So there's a short solution and a long solution. Finally, I'd like to just jump into what have we been up to in the last year. I'll try to make it brief. As you can see, we've broken down this chart by all of our investments, both funds and startups, broken down by year on the left side and by quarter on the bottom. Overall, we've deployed almost $60 million. And we're continuing to look at deals this quarter, and I think into this year, we'll start to increase pace. We were ahead of plan on the fund deployment side, and that was intentional. We said, look, in an environment like this, the most important thing we can do is provide capital into the funds in the ecosystem and let them do their job. And at the same time, on the direct side, we were cautious. But that is already starting to change as we see this quarter in January and February. Deal flow volume has picked up significantly. And people ask, how come? How come it was quiet in 2023 if you all had capital? And I think just if I would give a reason, one of those reasons is that some of the startups who had raised and maybe their valuations were slightly higher, maybe were a little hesitant to approach. And they had backers already. So inside rounds, existing investors could support them weather the storm a little bit. But now we're sort of through that and we're starting to see a lot more action come in. This is just a highlighting of our direct investments. You can see how they're our fund investments, and you can see the focus areas of these. We try to be balanced in our portfolio model, and we're looking at investors who focus on certain stages, certain sectors, and the weightings of their investments across certain geographies, because every fund has a different flavor, a different approach to the market. And from our point of view as a fund of funds, it's important that we have a very diversified and balanced approach as well. And we'll continue to build on that. And looking at overlap, we're looking at concentration effects and things like that. And then over some time, we'll learn where we want to double down even more on and what we feel the region may be missing. And founders, of course, come and tell us these things all the time. I might be an ed tech startup from Tunisia, pre-seed, and I don't see the 200 VCs magnet reports. Where are they? Right? So we'll know that there are gaps, and we get the question a lot of where are the gaps in funding. Honestly, it changes every 6 months. Sometimes it's a seed gap, and then we address the seed gap, and sometimes it's a late stage gap, and then that gets addressed, and it's just going to constantly change. But if you're a founder, you don't see that universe of data. You see who is going to be interested in my particular startup. Maybe it's a beauty and wellness company based in a country where none of these VCs cover. So we want to make sure that we're covering off on all bases. For direct investments, we're becoming a little bit more active, I feel like, in this quarter, but we certainly have been. If you combine all of our 2023 investments, we are in the #1 active firm in the UAE. I was, as those of you who know me, I was the most active investor from 2017 and 2020 in all of MENA every quarter. But that wasn't even the goal of DFDF. And in some ways, we were slowed down on direct investments in 2023, still ended up being the most active investor at 19 total investments. And aside from investments, as I alluded to in the morning, we built out the other half of our team, what we call value creation, strategy, development, ecosystem, engagement, and partnerships. And all of that flurry of activity has been happening and building up this last year. And it's very exciting for us to talk about some of the things that we are involved in. From the Dubai Center for Artificial Intelligence, which launched, we partnered with them on helping support the companies that were joining that. We're lucky to have so far 2 AI companies in our portfolio. We supported the Climate Future Week under COP28, delivering side sessions and a lot of the behind-the-scenes planning with the COP team and many of the other partners who were involved in that. And that was very exciting for us. We supported women in tech through the DIFC program with Standard Chartered. Also very meaningful for us to be involved in this and to see the talent flourishing. Again, just like sustainability and just like governments, these themes that we have, everything moves the needle when you put intent and attention. And that's all it takes. It's worked for me, it's worked for our team. Just have an intent and attention to certain parameters that you're looking for, and you'll make progress on those things. And gender equality and gender in venture capital and gender in startups has been something we watch for, and when you watch for it, you see the needle move versus not paying attention. We are also part of the Dubai Assembly for generative AI and delivering courses and trainings for that. So again, a very big focus for Dubai. I think we're one of the only countries that has a minister of AI, and we're very fortunate to have put a lot of momentum into that even prior to OpenAI coming onto the scene. And just recently, we're very proud with the Minister of Economy to have signed an MOU with KVIC. It's the Korean Venture Capital Association. And they have a very good model where they've involved the federal government and local governments within Korea. And now over the last maybe few years, have really taken that international and very intently partnering with other countries and creating corridors between Korean technologies to these other countries. And we're very proud to be working with them here in the UAE. And finally, our own homegrown programs and events like GITEX and Supernova. Is it still called Supernova? Yeah, Supernova. Changes the name often. But these events are cornerstones of the Dubai startup ecosystem, and convening is very important for these startup communities, right? If we don't have these types of events, then the rest of the world and the local ecosystem doesn't have a chance to convene and to interact and to meet. And so being part of this is important for us, and we're very proud to be supporting the GITEX team. And finally, also with the Minister of Economy, who launched the Future 100 initiative last year, we were lucky to get 8 of our companies as part of that. And the program involves a number of different commercial partners and government partners. And the whole intent of this program is to support these future innovators on making sure that they get off the ground the way that they need to, and they're getting the support that they want. Besides all of those examples, we've delivered over 50 talks, mentorships, and judging sessions with many of our sister organizations and partners, and we plan to continue to do so. We also were focused on just getting our name out there. I mean, I've heard from maybe some of you and many others, oh, we didn't even know the fund existed, or haven't heard of you. And that's okay, we're fairly young. But in the last year, just putting a little bit more attention on this, and we don't do this in a very pay for it all, paid marketing style. We try to be organic, and we're trying to do it under thought leadership itself. So publishing content, being a custodian to the ecosystem. And we managed to grow 8 times more than our peers. And the peer set was both local players in MENA, and we took US benchmarks of funds and ecosystem enablers, and still ended up growing more than them. We started our newsletter last year, which now has 3,000 subscribers. We encourage you all to also subscribe. And we're able to participate in many speaking events around the region, not just here in the UAE. In terms of thought leadership itself, we published several reports, over 25 blogs, and continue to try to get voices out there, our own team's voice, but also experts in the field who we want to work with and share their opinions and beliefs. Now I have some exciting key initiatives to show, and trust me, this will be over soon. But the few initiatives I want to just highlight, these were big sort of heavy lifting efforts from our team. We launched what we call the Dubai Future Venture Fellowship. So it is a 1-year fellowship program. We're probably going to modify some of that, the length of that soon based on feedback. But this was a 1-year program for Emiratis to develop venture capital capacity in the Emirati community and here in the UAE. Now, as you can see from some of the participants, they came from government backgrounds, different emirates, and private sector. And the idea is not all of these people should become venture capitalists. The idea is that the knowledge and the awareness of what we do in venture capital and how it works is important for every entity within the UAE to understand because of the path that we're charting forward. To reduce friction between a startup and an entity they want to work with in the government, or to reduce friction between venture capitalists and a family office that they're trying to raise from, right? So to make everything easier among the constituents of the ecosystem, we thought this would be very important, and it was a great success. Aside from bi-weekly courses and lectures and guest speakers and all that, we also ran a simulation masterclass. Excuse me. Well, I'll continue anyway. And out of our 12 participants, we really wanted to highlight the effort of 4 individuals. These people exemplified commitment, understanding, and dedication to learning the craft of venture capital. And I believe, actually, some of them will become venture capitalists or launch their own funds very soon. And so I want to give them kudos because their commitment level was unparalleled. Everyone was great, of course, but these 4 really shined. I was going to get to this, which is in addition to the fellowship program, which was happening every 2 weeks, we also took 3 days off and ran a fund simulation. It's like a Monopoly game for venture capital. And the important thing about this was that it doesn't just tell you the front end of VC, which probably everybody knows. You scout for deals, you try to win those deals, and you invest in them. Great. But that's like 1/4 of the work in venture capital. After you've invested in them, now you have to help your startups grow. And then you have to harvest your portfolio. And then you have to exit and provide liquidity to your investors. That's a lot of hard work. And I missed the other quarter. The last quarter is you got to fundraise a fund to do investments in the first place. When you're a young associate or something and you join a venture capital fund, you don't know any of these other functions. You probably won't even see them the whole time you're there, because fundraising and capital formation happens behind the scenes. The harvesting and value creation happens with a different team. And then the liquidity and exits also happens sort of outside of the day-to-day that a normal young associate would do. So this was really important practice for us, and the reviews were, the feedback was amazing. We're going to continue to run these programs here in the UAE every year. And these were not just open to our 12 fellows. So of course we had our 12 fellows here. We also invited associates and analysts and principals from all the VCs in the UAE. We said, why don't you send your employees in also to get training? Our whole team ourselves also went through the simulation, and it was really nice. So we're going to continue to run this. We also have similar simulation, Monopoly-style game simulations for family offices, for corporate, and for startups to scale. And I see some of our sponsors in the audience. Thank you guys for making all of this possible. We hired a company, and well, let's say a partner now, because we've become so close over the last year, in Strategy Tools, who has been the one who creates these things. And now we're going to work on a multi-year plan with many different products. Another big one that we ran was our first summer internship program. We had almost 20 participants from various prestigious schools around the world, and we'll be launching the second cohort application very soon. Coming from 15 different nationalities, all kinds of career backgrounds. And what this does is not just help expose them to venture capital through DFDF, but also to MENA and to the UAE and to Dubai. And they all got a little taste of that, and we could tell how exciting that was for them. Looking ahead in 2024, let's get the energy back up a little bit. I know that took a little while, but I have a few exciting announcements I'd like to make. The first is that we've always been thinking about how we can increase the capital base for Dubai. One way to do that is just have more investors. One way to do that would be to invite more LPs to invest in venture capital firms here, or to ask the government to allocate capital. And all those are great. We're working on stuff like that. But this one is very interesting. So in the case where we have allocation, or many of our portfolio funds have allocation in certain deals that are happening, but we're not going to fill those deals, we're partnering with one of our portfolio companies called Zest to enable an automated sort of engine that says there's an allocation, and here's a directory of investors who expressed interest in this stage, this sector or geography. And from our work in pipelining these investors so far, we notice, and many of you I've had conversations with about this, is that sometimes they're not comfortable investing in a venture capital fund because a 10-year lockup, blind pool, not sure about it. But a deal-by-deal based investment, yeah, that's more palpable. And it's a way for us to help them warm up to all of this in this, our industry, by doing one deal or another that they think maybe is very interesting to them or synergistic to their businesses. So this platform, which will launch next quarter, will enable this in a very seamless, scalable, and automated way, thanks to the technology that Zest has. So we're really excited about that. The second exciting announcement I have to make that's happening as a change to the fellowship program this year, it is now going to become a certified course at NYU. And this means that whoever the participants are, they'll be getting an NYU program certificate for taking the fellowship program. Why is this exciting? It's because aside from the academic and education and skill set that they gain from the fellowship program, a lot of them, it's difficult for them to take time to attend the courses or to feel like their employer would give them the permission to go ahead and do that L&D program. But now this solves for that. And it gives it a lot of prestige. So we're very excited about that. And third, this is really exciting for us. If anyone knows the brand Adidas, who doesn't? A company that started 75 years ago, or actually 100 years ago, I think, the earlier version of it. We have now partnered with Adidas, the founder of Adidas, his grandson, Horst Bent, on bringing sports tech and wellness as a niche focus area for Dubai Future District Fund, based here out of Dubai. And I'd like you to help me welcome Horst to the stage. Horst, thank you for being here. It's
pleasure. How are you holding up?
So far, so good.
Good.
As long as the technology doesn't break. But please have a seat.
Nope.
So Horst has been kind enough to come out here for this, and we've been working together for now over almost a year on thinking of ways that we can bring wellness and sports technology and sports communities together based on or in collaboration with the legacy of Adidas. So first question I have for you is if you could maybe help share with the audience, what is the origin of Adidas? Your grandfather started this. And what are some of the interesting things that happened in the beginning of the formation of the company?
Yeah, sure. It's a pleasure to be here. How much time do we have?
How much time is you need?
It's a 123-year history, so it may take some time. So my grandfather was born in the year 1900 in this little bitty town in Germany. He ended up being 78 years old when he passed away. I was 8. I'm the second oldest of the third generation. I was 18 years old when he passed away, so that kind of gives away my age. But I was having the pleasure of spending time with him and seeing him work and seeing him create something that most people thought made no sense at the time. And if you think about it, somebody that was born in 1900 and made it to be 78 years old would have survived 2 world wars, the Spanish flu, the Industrial Revolution, the Great Depression, and all that good stuff. And while that was not exciting enough, he and his brother decided to create an industry that didn't exist, which is sporting goods. So it was impressive. It was great to see. It was a wonderful time to experience with him. Of course, the family history is very intriguing, very unique, very exciting, very dramatic, actually.
Tell us a little bit about some of the drama.
Well, you know, the 2 brothers, there were 2 brothers, my grandfather and his older brother, and they created sporting goods really prior to the Second World War. They made shoes for the Berlin Olympics. They made track and field shoes mostly, and some soccer boots at the time when it was really not popular because sport didn't exist in that way. After the Second World War, the 2 brothers had it falling out. They split the company up. One created Adidas, the other created Puma. It became a rivalry that is still haunting this little town. Everybody there, they called the people that have lived there and are living there and have grown up there the people with the bent necks, because everybody looks down at the person's shoes to see which side of the little river they belong to in a way. So
that's not how you got your last name, though.
No, not at all. But that is kind of the drama that played out in that town, and the drama that I experienced when I grew up. But I also experienced my grandfather, you know, and his passion and his dedication to innovation and his spirit and his motivation to just be close to athletes at a time when it didn't mean anything to us. And only later we came to understand what innovation is and what kind of passion you have to make a difference. So it's been an incredible journey with a lot of cool stories.
And having grown up through all of that and now sort of being at the helm of the family legacy, can you tell us a little bit about what you've been building, what you've been working on with that legacy?
Yeah. So the textbooks will tell you that in family-run businesses, it's typically the 3rd generation that screws it up. Well, we didn't have that chance because the 2nd generation got us. And we were primed, my older brother and I, we were prepared to be the next ones to take over the family company until it wasn't there anymore because the branches of the family decided to sell it, which often happens when the patriarch, the matriarch pass away, then suddenly things change, and they have changed for our family. So in 1990, the company was sold. We share with Adidas, we still share the founder, obviously. It's the founder of the company, it's the founder of the brand, but also it's the founder of our family. We retain the intellectual property rights to him. And that really was the driving idea for us to really get back into the game, so to speak. Because when the company was sold, we had a liquidity event, that's great. But you know, the purpose was gone. What are you going to do? What are you going to do with your life? What are you going to do with what you brought up to be and so on? So it took us quite a while to find that again. And about 10 years ago, we created this company called Adi Legacy, which purely really focuses on the IP of my grandfather. And we concentrate on three areas. One is media, storytelling. This is fantastic because it's such a unique story. If it wouldn't have happened, people would have made it up.
I don't know if you can share anything, but there's some exciting stuff.
Yes, we're in deep discussions with people in Hollywood to create a limited series of 8 to 10 to 12 episodes, sharing the history of the family, sharing the history of the brand. We've been approached to do a theater play on it. It's a concept that I'm not quite understanding yet. Obviously, topics like podcast, a graphic novel has been produced, coffee table books. So everything in the media space where we can tell our story, I think, has real value for us and for the brand. That's one big focus of ours. And the second focus is investing, and that's why we are really here. We have created and launched a sports and health tech innovation platform. And because we felt that the space of sports tech and health tech was not disrupted yet. Initially, it was just sports tech. Then COVID hit, and we realized that health tech and sports tech have merged in a way, come very close to each other. So we've seen tremendous opportunities. We have launched an accelerator program focused on finding the next startups, the next founders that would revolutionize the space of sports or health tech. And we have, in a way, disrupted that vertical in Germany or in Europe, for that matter, and in the US. And one of the big motivations for us to be here is just to drive this narrative into this region, because we see real opportunity here, real growth opportunities here, and we want to focus on that. And the third part is really a philanthropic endeavor for us, is to give back to the world of sports, in particular to the athletes, because we feel a lot of the athletes are not being well advised. They don't know what to do with their success. They don't know what to do with their own legacy, with their own brand when the lights go out. Sometimes they make bad decisions, and we want to give back to them and make sure that doesn't happen. That's something that we've seen my grandfather do successfully in the 60s and 70s, when our German soccer heroes were playing soccer. They didn't make money playing soccer. They made money working for Adidas ultimately, and being successful there. So we want to give back. We want to create an educational platform where athletes are better prepared to become better human beings.
It seems to us that there was healthcare and then there was sports, and it was for specialists in those two markets. Whereas now the idea of biohacking or longevity and lifespan and health span is becoming so mainstream, or maybe I'm just in that bubble, but it seems to be more pervasive than ever before. We have more data, more knowledge about our bodies. Athletes are now using that data and technologies to enhance their own performance and health. It's a super exciting time for us to try to bring all of this together, and nowhere else, we think, than to partner with folks like you guys. Well, you mentioned that this is an interesting region for you. What is it about Dubai that made you really decide on this being the third home of these activities?
Yeah. So for us, it's the time has come where we want to scale this globally. And Dubai and the UAE and the greater South area that you have defined earlier, the global South, I think you framed it, is of course where growth will happen more than in the other parts of the world where we are. We have learned that sports is recession-proof. Sports is pandemic-proof, because everybody has that anchor in sports, either consuming it or enjoying it or doing it, that it will always be there. And we have seen a tremendous amount of creativity in that space, and we feel like there is a natural opportunity for us here in the region. You have access to talent here. You have access to capital. All the things you've mentioned is readily available here. I think for the companies that we have invested in, it is productive to be here, to be having access and the opportunity to scale into this region. We feel that we can bring our ecosystem, our network, and our startups here to scale on their own. So it is really full of opportunity. We just have to take that next step, and super excited to do it.
We couldn't agree more. I mean, we're absolutely thrilled to have this relationship with you and being partners together on, hopefully, stay tuned to what we end up bringing to Dubai together. I think it's going to be very exciting for everyone. Thank you, Horst. I think, don't worry, you don't have to hear from me anymore. I think Jane is going to come back up, or we're going to have a break after some videos. I shouldn't be the one telling you this, but I think that's what's happening. So.
2 years ago, WellX started with the mission of bringing down healthcare costs at a national level. We're doing this by making insurance prevention focused. The GCC mandates health insurance for all its residents and citizens. By making insurance prevention focused, we hope to drive improved behavior from a member level, get them to a healthier place, get them to use digital health tools like telemedicine and online pharmacy, which will eventually drive down the cost of claims and therefore stop the ever compounding issue of increasing insurance premiums. Our app connects to your wearables, tracks your sleep, your physical fitness, and rewards you for taking positive steps towards your behavior. We've also significantly enhanced the customer experience from an insurance standpoint by allowing easy access using AI to customer service and support from the insurance standpoint. Since launch, we have secured more than 20,000 insurance members, generated more than $1.3 million of recurring revenue, and have 4 insurance partners in the UAE. By the end of this year, we hope to launch in Saudi and start to drive traction there as well.
Hi everyone, my name is Rawan.
And my name is Zuhair, and we're both the co-founders at Zest Equity. Zest is digitizing private market transaction processes.
We've worked with venture stakeholders, including venture capital funds, entrepreneurs, founders, investors across the ecosystem.
We're excited to have digitized over $50 million worth of transaction volumes to date across multiple jurisdictions.
And we're excited. We're building more and more tools every day to make processes more transparent, more digitized, and just generally more efficient. And we're also expanding outside of venture and into the private equity space.
We're very proud to have DFDF on our cap table, being our first institutional investor and our biggest supporter to date.
They have a great team, and honestly, the wider DIFC ecosystem has been instrumental to our success. We love working here, we love being here. So thank you, DFDF, thank you, DIFC.